Low-risk trading with Bollinger Bands and RSI trendline breaks. This is one of the most profitable and reliable setup strategies for scalping intraday and swing trading for any markets. As always, this video provides a clear winning step-by-step guide to how to successfully trade in the forex, stocks, commodities, or any financial markets and generate consistent profits. So by the time you finish this video, you'll know exactly when to enter high-probability trade using the Bollinger Bands and RSI indicators. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto trading. Because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Bollinger Bands and RSI are very popular indicators. Traders have mastered how they can help market analysis. But before going into the specific discussion, let's take a look at the flashback about the two indicators. Boillinger Bands Overview. Click Indicators on TradingView. On search box type Boillinger Bands. Click to select. We can change color and thickness in style option for Boillinger Bands. Boillinger Bands is a technical indicator that is used to measure volatility and determine the direction of the trend of price movements. This indicator can also be used to find overbought and oversold conditions. The Bollinger Band indicator consists of three lines: upper band, lower band, and middle band. Basically, the middle band is a moving average line and the upper band and lower band lines are deviation lines from the middle band line. Bollinger Bands lines called the upper and lower bands act like belts for price movement. In a sideways condition, the two bands are quite accurate as oversold and overbought areas. This indicator was created by John Bollinger, a technician trader, in 1980. What time frame is best for Boillinger Bands? Actually, choosing a time frame is more related to the trading style by each trader. In trading, we are familiar with scalping strategies, intraday trading, swing trading, and position trading. Scalping trading, which is a short-term trades, is more suitable to use the 15 or 5 time frame for accurate price details. Intraday traders who open orders in a day are more suitable to use the 1 hour and 4 hour time frames to project daily movements. Swing traders who open orders for more than a day are more likely to use the daily time frame. But they will also go to a lower time frame to get the best price. Position traders, these are long-term trades, allow traders to hold orders for a month or two or even longer. This is more suitable with using the weekly time frame, but also paying attention to the monthly time frame. The longer the open order, the more margin strength is required for the durability of the account. Do Bollinger Bands actually work? Bollinger Bands work especially well in sideways markets. In this condition, Bollinger Bands form horizontal or flat lines, and price movements often bounce on the upper and lower bands. If you find this condition, the Bollinger Band is good enough to determine to buy or sell by looking at the price of the Bollinger Band. Like its function to measure volatility. The higher the market volatility, the two bands will expand. While in low market volatility, both bands will be seen to squeeze the price. At an advanced level, the use of Bollinger Bands is developed with a trading strategy called BB and RSI trendline breaks. What is the Relative Strength Index or RSI indicator? The Relative Strength Index or RSI is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes. It helps to evaluate overvalued or undervalued conditions and the price of that security. The RSI is displayed as an oscillator or a line graph on a scale of 0 to 100. The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal or corrective pullback in price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates an overbought situation. A reading of 30 or below indicates an oversold condition. How to use the RSI indicator. The RSI element consists of three main lines, namely the level 30 line, the level 70 line, and the RSI line. In its application, the RSI uses a scale of 0 to 100, which reflects price conditions on the market. The simplest use of the RSI indicator is to look at the level of the RSI line against a level 30 and level 70 lines. If the RSI line shows above 70, for example at 80 in general, the price has entered overbought. But if the RSI line shows a number below 30, for example 20, then in general the price is currently entering the oversold area. If the price has entered the overbought and oversold area, it is possible that the trend will end soon, and there will be a reversal. In other practices, RSI users can add the 50 levels, which are used to measure the bullish or bearish trend. The reading of the trend direction. If the RSI line is below the 50 levels and is pointing downwards, it means the trend is bearish. If the RSI line is above the 50 levels and is pointing upwards, it means that the trend is bullish. RSI overbought or oversold. Generally, when the RSI indicator crosses above 30 on the RSI chart, it is a bullish sign. And when it crosses below 70, it is a bearish sign. Put another way, one can interpret that RSI values of 70 or above indicate that a security is becoming overbought or overvalued. It may be primed for a trend reversal or corrective price pullback. An RSI reading of 30 or below indicates an oversold or undervalued condition. Overbought refers to a security that trades at a price level above its true or intrinsic value. That means that it's priced above where it should be. According to practitioners of either technical analysis or fundamental analysis, traders who see indications that the security is overbought may expect a price correction or trend reversal. Therefore, they may sell the security. The same idea of applies to a security that technical indicators such as the relative strength index highlight as oversold. It can be seen as trading at a lower price than it should. Traders watching for just such an indication might expect a price correct direction or trend reversal and buy the security. RSI trendline breaks. Method of using RSI is the use of trend lines directly on the oscillator itself, in much the same way that they are used on price charts. Trend lines are one of the most common and helpful tools in a trader's kit. They are used to show the price upwards, downwards, and sometimes sideways movement. Confirmed trend lines are drawn by connecting a cycle low or high with at least two other of the highest or lowest points on a chart, to create a line of best fit connecting rising swing lows of the RSI in an uptrend or lower swing highs in a downtrend. Traders can find trading opportunities with strong risk to reward setups, because RSI measures the surge in closing prices. When RSI changes direction and either breaks above or below a trend line, a significant move in price can result. So we'll use the RSI indicator to show us if the prevailing trend has ended and a new trend is underway. The first step, we're going to measure the overbought or oversold conditions as a crossover system. And then we're going to take it one step further and look for a break in momentum of the prevailing trend. The base rules of this technique are straightforward. We only need to connect the most recent RSI peaks or valleys with a trend line. And we search for a breakout of the trend line, which will warn us that the market has lost its steam and the prevailing trend has lost its momentum. How to trade the Bollinger Bands and RSI trendline breaks. Now we will get to the point of trading using Bollinger Bands and RSI indicator. Here the buy rules and sell rules using this strategy. Buy trading strategy. First, price is falling within a trading range. Second, while the price must tag the lower Bollinger Bands. Third, wait for a bar that closes higher than open. Fourth, RSI oscillator breaks the downtrend line and above the 30 levels as an oversold signal. Open buy trade. Place a stop loss below the lower band line. Target profit on the middle band is much safer, but you may try target profit when the price approaches the upper band line. Sell trading strategy. First, price is rising within a trading range. Second, price must tag the upper Bollinger Band. Third, wait for a bar that closes lower than open. Fourth, the RSI oscillator breaks the uptrend line below the 70 levels as an overbought signal. Open sell will only be done if all criteria are met. Place a stop loss above the upper band line. Target profit on the middle band is much safer, but you may try target profit when the price approaches the lower band line. This strategy is great. Take a look at some more examples to make sure you understand and can apply this strategy. Traders, if you enjoyed today's video, leave a like to it and subscribe to MFS Trading channel. Good luck for you.